Thank you so much for joining us for the Deribit Deep in the Money podcast. I know it's tiresome, but you always gotta introduce yourself. So why don't you who are you and what do you do?
Yeah, thanks for having me on, Paul. So my name is Zaheer Ebtikar. I currently work at a firm called Immutable Capital. We're a prop trading multi-strategy fund. Things within crypto. We do the more traditional stuff with Bitcoin and ETH. We do a lot of trading. We do options trading. We do future swaps, that kind of stuff. And then we also do a lot of DeFi trading nowadays as well. And so that's been a fun transition for us as a team. We're also on the venture side, so we try to invest in projects that we kind of believe like match our DNA, and that's mostly on the trading side, mostly on the borrow lend side, that kind of stuff. So that's been a bit of our focus as of late. We're a pretty small fund in terms of our total people on board, but we try to really get out there in terms of our name and our brand. And just a bit more about my own background. So I've been in this market for about 3 or 4 years now, and most of my background has just been in the liquid side. But it's obviously been a very different game, I think, in the last couple of months, as everyone's kind of noticed, as earlier stage projects have kind of been in the limelight lately. So I think that's been a little bit more of our focus in the last few weeks and months.
Interesting. So you mentioned the liquid side. So let's get right into markets. What's your read on the market right now? BTC has been driven up by spot demand mostly on pretty low or even negative funding. ETH has been doing phenomenally against BTC. What's your take on the general market environment right now?
It's really hard to give a good take, especially as prices climb, and to give something that's concrete for the longer term without just saying I don't know, because that's the honest answer. But it's also like, how can I make it more constructive than just saying I don't know? Um, I think in terms of short term price action, short term, which way I think the market's going to kind of go. In the last 2 weeks, we've seen a lot of selling, and that selling has definitely overwhelmed the buying. Obviously, as price has gone down, and I think just overall in terms of how much spot selling there was, I think we've probably seen the worst of it for the foreseeable future. So I think in most cases we probably resolve up in the next kind of coming days to weeks. But there's also some technical factors that people need to kind of consider, at least in terms of making a forecast for the short term. For the longer term, that's when the narrative stuff really kind of starts kicking in a little bit more. Um, that's when you need to start thinking about, okay, well, who are the large bidders that are still left in this market? Where is the new flight of capital going to come from? As Dan from CMS always mentions this, he says, it's pretty expensive to keep Bitcoin, at $50,000 or above that price every single day, as the net emissions, is a natural sale. So there needs to be buying every single day in order for price to necessarily keep up. So I think that image starts to become a little bit more murky. I did a podcast with FTX a couple of months ago, and in that podcast, I think at the time there was a little bit more clarity in terms of U.S. institutions and institutions abroad really trying to go into BTC, and I think a lot of that has kind of already culminated. But
Hmm.
now we're kind of seeing price stall a little bit. We're seeing the economy reopening. We're seeing less of that narrative of having an inflation as an inflation hedge, and more of, okay, well, things are going kind of back to normal. How does this affect uh, the average portfolio? Does it make sense for a lot of people to hold Bitcoin or ETH at these prices? So I think that's been the conversation for a lot of funds in the last couple of days to weeks. My outlook is still that we continue to do better into 2021, but I can't really give something too clear in terms of the shorter term um, price drivers outside of just the technical factors. I think a lot of the spot selling has kind of subsided, and the market absorbed it, which is really good. But then there's also the opposite side, which is, okay, well, how many more shorter term catalysts do we have that we can tangibly look at and say these are really good things that are going to come up in the next couple of weeks, right? We're in this kind of weird period too, where we had earnings today,
Mm.
and a lot of people were really expecting this Facebook rumor to kind of materialize.
Mm.
Obviously nothing happened, but I think it's going to be important to recognize if in this next period of you know, kind of this next earnings period, if we have any sort of um, news regarding Bitcoin. I think we saw, one clip today from Nexon buying 100 million, which is, great, but it's also not to the same caliber as, a Tesla or, another really large hedge fund putting, 500 million plus up on Bitcoin. So I think you're going to need more and more of those kinds of things to continually push price up. That being said, there's also still spot demand at these prices, and that's kind of what's pushing funding into the negative territory. And we're still seeing good flows overall, but we're not seeing that same level as we saw earlier in the year. And to be frank, it's also really hard to continually go at those levels, right? It's really hard to continually post up like 50% months, and that sort of thing.
Yeah, that does make a lot of sense. You mentioned Tesla and the narrative that institutional spot demand is driving prices up. Tesla just sold a bunch of Bitcoin yesterday, and that's something I've like talked about with a bunch of people. That what happens if like all the institutions that have been allocating to Bitcoin, what's their game plan? Like, are they planning to sell eventually? Are they planning to just keep it forever? And how do you interpret Tesla selling a portion of their Bitcoin? I mean, they said they're doing it to test liquidity, which, uh, I mean, I don't know how likely that is to be true. How do you interpret that?
For sure. I think overall it sends a really good message, and not because of they're doing it to sell, to test liquidity, right? Like everyone's going around with this idea of bullish selling, like the meme that's originated from crypto Twitter
Yeah, diamond
is now
hands.
right. People are kind of going with this idea, and I think that's not exactly the correct takeaway, but rather it's like, okay, they sold, you know, let's just say 200, I think it was 270 million in total. Um, I think what, like 2 or 3 weeks ago, and it didn't really have a negative impact on price, right? And so I think that just shows the maturity of the market and the players that are holding Bitcoin, right? It's kind of like a hedge fund selling a large name, right? Obviously not the same because these are companies, but it's like if Oak Tree sells Apple, right? It's like, I mean, you shouldn't like it shouldn't necessarily have a really negative outlook on Apple. It's just kind of like, look, like we had a bet and it worked, and in some way like we need to trim some of our position, right? I think for Elon and for Tesla in general, their motivation is more so to kind of strap on their earnings numbers, and it makes sense, right? They're a company at the end of the day, and their core mission is not Bitcoin. Yeah, and anyone who's kind of thinking like, okay, like they need to hold forever, it's like that's not how a company works, right? Like they've already 2x their USD holdings, right? Like they could literally sell it all or sell even half of it, and like they'll have as much skin in the game, quote unquote, as they did before. So I think people need to realize that at the end of the day, if these companies buy, they're going to sell, um, and in the same manner that they bought, it's going to be very aggressive selling, especially if they sell larger clips. So and I think it's also kind of like naive to think that everyone is in this asset class out of some ideological alignment. It's like there's a lot of people who are just in it because they think it's a great bet, and there's nothing wrong with that, right? There's everyone who's complaining about them selling also kind of is just complaining that they got dumped on, as opposed to you know some sort of ideological alignment, right? So I think that's a little bit, you know some self-reflection is required in the industry, I think.
Oh, for sure. Yeah, yeah. That's true. Yeah, I agree 100%. I have a question about order execution and like what's been going on in markets the last weeks. We've seen these like massive clips of both BTC and ETH getting unloaded in like a super. Someone was just like market dumping 1,000 BTC plus, and it's super surprising to me that the people who trade serious capital, like there's so many more efficient ways to get rid of 1,000 Bitcoin than to just market dump them. How do things like that happen? Like who has 1K BTC and doesn't know that OTC markets and block trading exist?
Yeah, it's funny actually. I was having a conversation with a friend of mine, and we were joking. It's just like, did someone wake up from a coma 10 years ago and just see that their Bitcoin is now worth a whole lot and just auto dump it on Coinbase? Um, But I mean,
Makes no
truth,
sense to me. Like who? Like
right? Yeah,
talk to
totally.
someone. Talk to Genesis or something. Like it's not that hard.
Yeah, talk to Ro.
Yeah,
Um,
exactly. Ask Ro. Like he can give you a good price.
right, right, and you know, it'll be a lot less aggressive on the market. I think when you see orders like that, it's usually one of two things. It's either someone is just trying to get out and it doesn't matter to them, and they know something, right? And that's the worrying part, right? That's the part where it's like, okay, is this, you know, when we're reading this order flow, right? Like that's the part that really kind of scares you. It's just like, is some news about to
Yeah.
hit, and is
How
someone trying,
toxic is it? Yeah.
right? And is someone just trying to get out before all hell breaks loose? And then there's the other part, which is, okay, these are just unsophisticated players that need to get out and they don't really know what they're doing. Um, and it seems like as time is progressing, that it's more the latter than the former. Um, you really saw this actually at the lower end of the range when BTC hit 47K. Liquidity just kind of vanished, and then I think like within an hour or two, you kind of started charting back up to 40, 49, 50, 51, 52. And that was just kind of showing you that, first of all, the selling exhaustion kind of dissipated. Second of all, someone started buying it. I think one thing that people don't realize in the last 2 months is that volumes have been generally low, regardless of, you know, price being this high. Um, and this is mostly on the US side, right? Like US spot volume has been generally lower in terms of BTC notional size than it has been earlier in Q1. So I think that that's also part of the reason why, right? Like you're kind of having this mismatch of, okay, some hedge fund wants to buy like 2000 BTC, right? And you'll see price just like go up for an hour and a half, right? And it takes a while for the arb to kind of come in between Coinbase and these different exchanges. And then, you know, once the order is filled, then the price kind of starts dropping if someone else wants to sell 2000 Bitcoin, right? It's like you're not getting that matched liquidity. And I think that's what's causing a lot of the price swings, at least in the last couple of days, right? Like after we had that, you know, massive leverage wipe, um, you just had like a very illiquid market and a lot of just, you know, you had dealers both having a lot of spot that they had to offload, and then, you know, also had like a bid side that wasn't super strong, um, right? And so that combined with the fact that like, you know, people were getting like mismatched, you know, liquidity for spot bidding, kind of leads to this really choppy action. And you know, it always happens, right? It never like there's never a point in Bitcoin where if we drop, let's just say 10-15% within a couple of hours, you know, where you have rational players come in and just buy it, right? Like there's usually you get some sort of like massive seller coming in selling like 500 BTC clips at a time. Um, and then, you know, that kind of just forms a bottom once that selling dissipates, right? It happened when we went from 18K to 16K. It happened for almost a month in January. You know, so it happens constantly. And as soon as that selling starts dissipating, then things get a little bit more interesting, I think, on the bid side. And I think, you know, that's kind of my outlook is I think we've seen that. I think we've seen the worst of the selling. And now it's just kind of up to the market to make a determination for which way price is going to go. One thing that people I think really have a hard time with, especially in these later stages, is that they think that, you know, after a massive leverage wipe, right? Like after something where price, you know, drops like 15-20% in a couple of hours, you know, there's like I think it was like 8 or 9 billion in total liquidations or something like that. People think that the price just automatically goes back up or automatically goes down, and it's just like it just never that'll never happen. Um, you know, the book is not like, you know, people are going to play the various trades, right? You have the carry trade, right? Like, so now people have to go long futures, sell spot. Like you just will not get that much demand to offset the supply that exists, and vice versa too, right? Like, you know, when prices like topping out, like it gets really hard um, for people to kind of take the other side of it, right? Like it takes a while for that position to get unwound. Um, and this is what kind of causes those carry trade blowouts, right? Like that night, I remember I was watching I was watching on Skew. I was just watching the futures curve. It just blew out from like, you know, I was I was watching from 28% APR in the 3 month rolling, and it just like went down to like 18%. I was like, oh, this is probably a nice spot. And then it just goes backwards. And I'm like, what the hell? Right. Um,
I feel like the most obvious trades are sometimes the best in a way, especially after like the big leverage blowouts when people get liquidated and there's lots of forced selling. There's so much opportunity around, right? Like you could probably make a trading career only trading after like a big leverage blowout and like just scouting for opportunities.
Yeah, I mean, to be quite honest, it's funny. It's like there's so many people who kind of ask me like, oh, like, who should I follow? Like, where should I get content from and all this stuff? And I'm just like, look, like the best traders in the space give out their information every single day and nobody cares. Like nobody bats an eye, right? Like
Yeah,
um
yeah.
Sam Trabucco from Alameda, he always just writes about, big liquidation events. And he literally just says like, this is how we make our money. He's a great follow, by the way. Really
He
insightful.
is, he is. Yeah.
But yeah, it goes back to that point, right? Like there for a lot of these funds now, they're just too large for them to play anything except for those large leverage, wipeout days, right? Like they can't, play $100 million position, for some Tesla news or something like that. There's bots that'll beat them, right? So now they have to kind of like change their strategy, and that's truly how a lot of people make their money in this space, right? It's just they wait for these things to happen. Now the flip side is that like on the night that the price went backwards on the futures, um, it gets hairy because even though there's a large amount of leverage that's built up, the low point, quote unquote, on futures is a little bit subjective, right? So, like you could
Mm.
argue that going from 50% APR on the 3 month down to I think 18%, 20% is enough of a wipeout, right? So, if you're the average fund, right, and you're just starting to go like really long around 25%, and then you start going longer at 18%, right? It's like, do you have the margin to go backwards? That's the part where people get blown out. That's what causes March like events where everything just goes way down. Nobody has a margin to actually take the longs that they wanted to, and things go way more south than they actually thought. So those are the spots where it gets really tricky because you don't like we haven't had backwards futures, I think, in almost a year. Um, so how do you go from this environment of price being super high and futures like not really going backwards to, oh my god, all of a sudden they just went backwards at like 50K, right? That's the really tricky thing. So I think like for any of the sophisticated funds, they never like really go all in at any particular amount of the curve, but they just kind of like scale in, and make sure that they have the risk parameters such that even if it goes backwards, they can still go in. And it's funny, one of my partners, he even mentioned, um, when the curve went down, I think at around like 20%, I was kind of just like, oh, this is a pretty sweet spot. And he was just like, oh, don't forget, like this stuff can go backwards super easily. And like lo and behold, like an hour later, it just wicks all the way down. I think like Binance was like 43K or 44K on the Junes. Um, so yeah, I mean, it seems brain dead until it's not. And that's the really scary part.
Yeah, I mean, it's always like that, right? I mean, like it's always the stuff you don't expect that blows you out. Uh, let's talk about the basis trade and futures premiums. It's super surprising to me, and I talked about this with Ro as well. Futures like usually trade like between 20 and 30% annualized premium, and I mean, I saw you talk about it on Twitter, saying it's mostly regulatory, but I mean, there has to be enough capital to take advantage of that, right? You can basically earn like 20% plus risk free. Why aren't more people doing the basis trade and tightening the spread?
Yeah, I think I touched on this a little bit before. I think that there's two, maybe three things that really set up yields in crypto the way that they are. And it's funny. It's like I talk to Ro and I talk to Dan about this all the time. Like this is the only thing we ever talk about is just the futures. Um, but number one, one of the biggest problems is DeFi now, right? Like these yields wouldn't be this high if the amount of yield that you could get on cash or even on Bitcoin was, uh, anywhere remotely this high, right? Like you would not be able to squeeze out 50% APR on the futures if if DeFi wasn't yielding some ridiculous number too, right? So now liquidity is spread between both like centralized exchanges, which are also fragmented, and you also have that on the DeFi side. So that's number one, right? Like now there's just more yield than capital that exists. Number two is the capital that exists, right? Like you don't have like the stable coin amount is increasing at a very rapid rate, but it's still way too small for the amount of leverage that people want to take in the space, right? Um, I think Aave hit like $10 billion in deposits, right? Like you have a very large amount of money kind of coming in, and there's so much demand, by firms like Alameda and and even us, right? Like that want to take advantage of on-chain leverage that you don't have the amount of cash that you need in the ecosystem to kind of get there. I think that's like one of the best opportunities that exists in this space still. And I think people really underestimate how much cash you need in order to bring these levels down, right? Like it's not like $1 billion of cash is going to change anything in DeFi or in the futures trade, right? Like you would need like tens of billions, right? If not 100 billion plus to really, make a dent in these yields. And then the third point, right, is just like it's a regulatory thing, right? Um, if US institutions can't park money on if they can't park money on FTX, Deribit, or whatever else, then it's going to be very difficult for them to really get those get the curve down. Even with the CME, like people think that if you're a U.S. institution, you can just automatically go to the CME and onboard. There's a lot of like built-in mandates and very complicated legal structures that U.S. institutions need to go through in order to kind of get onboarded for the CME and take those opportunities, right? Like insurance funds would love to take this, but it's like, can they? That's the tricky part, right? I do think that within 2 years these yields will completely collapse. The question is just like how and where the liquidity really gets sourced from. I think you'll see like you're seeing this actively in the stablecoin issuance, right? Like I think I think from last year till now, or actually not even last year, since like November till now, you have 5 or 6x on USDC on their market cap. Tether's at almost 50 billion now, actually north of 50 billion, right? So like you're gonna see stablecoin issuance just keep going up, right? And those yields theoretically should come down, but there's just such a massive market for margin in this space that like it'll be hard to outpace. Oftentimes you see this on like FTX or Binance that they just literally run out of cash. So they'll like take at a ridiculous rate, right? Like sometimes the borrow rate or sorry, the lending rate on FTX will hit like 60 or 80%. Obviously, those aren't static numbers, but it's just like that's insane, right? Just for cash, because the ecosystem needs it. So I think like you're gonna see this growth of cash that kind of comes into the space, but it's like people also need to recognize it's really hard to get onboarded to crypto from a legal perspective for a lot of these US institutions. Like buying Bitcoin is very different than like, being able to take out some of these more exotic trades or even interacting with DeFi.
Yeah, of course. That's very true. I agree. What's your take on the exchange landscape? I mean, you touched on regulatory issues. Um, it's still kind of a wild west, right? I mean, some of the exchanges don't do KYC, and do ridiculous volumes. What's your take?
Yeah, yeah. The exchange game has been the most interesting thing for me in the past year. I wrote about it for FTX. I talked about it on the FTX podcast as well. Um, and I kind of touched on it even yesterday in a tweet, but I think a lot of what you're seeing with the exchange games nowadays is just people are getting onboarded at a pretty ridiculous rate. And at the end of the day, there's going to be regulation that kind of comes in. For anyone who's crypto native, they all know that like, I would probably assume more than half of the open interest on Bybit is from the US, right? So it's like, just because you're not on BitMEX doesn't mean that you can't be subject to the same ruling. So I think you're going to see the regulatory landscape be a lot more aggressive. Now that the Biden administration is like fully in and Gary Gensler is, made head of the SEC, you're going to see, SEC and CFTC kind of come after crypto a bit more hard. especially on that end, right? Because it's very different between DeFi regulations and the centralized exchange regulations, because the centralized exchanges act as banks, right? Um, if yeah, there's like Bybit is essentially a bank in the eyes of the U.S. regulators, right? So uh, that can't really happen, right? So this is kind of the corner that they paint themselves in. Um, but yeah, I think the end state is inevitable. These things don't exist. They have to geofence or something. And I think, it's funny, the business model of exchanges for a lot of these exchanges that are kind of toxic, they don't really like they're not really helping their own cause all that much, right? Like, I think this is obviously a very biased take, being on the Deribit podcast and last month being on the FTX podcast, but I mean, yeah, I think with exchanges like FTX and Deribit, right? There's like this conscious effort in order to offer products for institutional players,
Hmm.
and also not really break any laws, and I think that's the most important thing, right? Like like on the totem pole of uh, you know, regulators coming through, it's obviously going to be the exchanges that operate on, minimal KYC, if any KYC. Um, you know, people who keep records, people who make sure that the source of funds is you know clean, that kind of thing. Um, so I think that's what you're going to kind of see in the next like 6 to 12 months. I think even the new administration is kind of a catalyst for that to even occur, because it's not a secret anymore to anyone, right? Like this market's $2 trillion, right? Like that will catch a lot of eyes if it already hasn't, and we have reason to believe that it already has. So we're going to see a lot more of these like shakeouts kind of happen, especially for the non-defensible exchanges. So we'll see how that kind of shapes up. I think, generally speaking, the exchange business has to go in one of two ways, right? Either you build the best exchange that is like, everyone wants to use, and has all of the products and has all of the attractions, right? Or you build the most robust like institutional exchange, right? And without me being biased, I think you guys can guess, which two exchanges fall in that category. But um, I think outside of those two, it's going to be really difficult to justify longer term, uh, kind of positioning for a lot of these exchanges, right? Because if all of the volume, if all of the flow, if all of the interest is going to a few exchanges, it's just going to be really tough to compete. And you're seeing that like very actively. Uh, there's a pretty large exchange, in Bybit that like has lost a lot of open interest in the last like month, right? It's really hard for that to continue in the pathway of like positive growth if a lot of the clientele may be retail, right? Or what I have reason to believe is retail. Um, so I think these kinds of business models are self-defeating almost. Um, so that's kind of how I imagine the exchange wars ends up taking place. And then there's also the DeFi side, right? Like a lot of these exchanges that don't offer anything that's like really unique will also get cannibalized by DeFi, right? Like if I can do something on chain, I will. It's a lot easier. It's a lot better. Liquidity is way more, especially for spot trading. And as you kind of see with like Mirror Protocol, UMA synthetics, and so on and so forth, like if you can start doing derivatives on chain, like it's game over, right? Um, so I think as these things start proliferating a little bit more, it'll be hard to justify centralized exchanges, especially the ones that aren't really stringent on KYC AML.
For sure, for sure. I actually think it's kind of surprising that not more regulatory action has been taken. I mean, like after BitMEX, I'm still surprised that like the U.S. has basically left some of these questionable exchanges alone for the most part, and I agree for sure. Like uh, winter is coming. The question is when and how. Let's talk about options specifically. You guys trade options, right?
Yeah, we're pretty deep in the option space.
So you do both delta neutral and directional. Like what's your strategy?
It's pretty. I don't know. It's kind of out there in terms of what we have to do. I think it's it's a combination of doing, matching our DeFi side with our prop trading side, and then also, trying to capture yield and that sort of thing. We flow with the market a lot of times. So, obviously, if we have reason to believe that, IVs are mispriced, or, call skew is way too high or something like that, then we'll take the other side of it. But a lot of times it's just to balance the book, and I think it's a lot easier to do that with options. For anyone that's trading size, than it is to do it with perps, or just it's just a lot better, depending on what your outlook is. Options also offering the ability to bet on time is a very unique thing.
A lot of people also watch options flow to get a bias directionally. Do you also like look at open interest, what options get bought and sold? I feel like especially in the last couple of months, as lots of big traders and big players like slowly moving towards options. There's been so much alpha in just watching options flow and like how options move.
Yeah, I think the it's funny. It's like options are now kind of the derivative choice, that people think is like the most alpha producing, compared to, like, perp swaps in 2018. I think a lot of people don't really understand how the options market works in crypto. Um, so, like, it's like talking about open interest, right? Like, open interest is a great stat, but it's also very deceiving for options. It doesn't really match one to one with like how large the market is. Um, Not to say that, the market isn't booming for options, but it's just like it doesn't really match with, how much total exposure there is on Deribit at any given time, or, any options platform, as opposed to like, the perp swap side or the future side in general. I think, watching options flows is definitely a very unique position to kind of watch and see, but it's also like, I think for a lot of players that are kind of doing this in a amateur setting, it's very hard to kind of get a lot of alpha out of it, outside of the really big, notable positions that people take on. There was a fairly large put at 50K strike the last couple of weeks that's kind of acted as a magnet. Things like that work, but it's also like that doesn't happen all that often. So, if you're watching this intraday, it's kind of hard to like paint a picture with it, but also depends on, what your strategies are. Our friends at Orthogonal Trading, Josh Green, they do a lot of that kind of work, and it's very much kept within its own community, right? Like, everyone on Paradigm knows each other, right? So, in that community of people, it's, the conversation gets really interesting, but it's also like, I've noticed that it hasn't really proliferated to the broader ecosystem. Um, so I think a lot of options flow is kind of like a if you know you know kind of thing, um, and it's tough to really, uh, give this information out to a lot of people, because it's like they don't really interact with Deribit, they don't really interact with like, with Paradigm, and they don't really, see the players and know how they operate to really get the full image. Um,
It's only one side watching options flow. So much of it is hedging and offsetting
right.
different positions you don't see. The real alpha is in filtering what's relevant and what isn't.
Yeah, and that's the really hard part, right? It's like you see some guy just like, okay, like this guy's lifting all of the puts, right? Or you see a lot of call sells or whatever, right? It's just like it's tough to say that, like, okay, is this the only position this guy's taking? Like, it doesn't really work like that for, like, for the perp market. It's a little bit different, right? It's like, okay, someone's actually bleeding money, um, trying to short or trying to be long here, right? So it's a bit different, right? Like, people can burn the premium on options and it's totally fine, and they could be completely different on the other side, right? Like, I remember, especially in December, when the 36K call buyer for January was being talked about by everyone, right? Like, a lot of the people in the know, yeah, a lot of the people in the know were just kind of mentioning, like, look, like whoever sold these to him is definitely hedging on the way up. Like, they're not
Of
they're
course,
not
yeah.
naked on the other side, right?
Yeah. Yeah.
Um, so, there can be a market where both the call buyer and the dealer are making money theoretically, but it's just executed elsewhere. So that's the part that gets a little bit hairy, right? So that's like, again, like where the if you know, you can kind of determine, based on what you see across all exchanges, across all products, right? Like you can kind of start to paint a picture, but it gets really tough.
Yeah. It's also like the Twitter flavor of the month kind of thing. There's a new thing that Twitter finds interesting every month, I feel like. And people become quote unquote experts, but have no idea what they're talking about. And I feel like that has kind of happened with options as well, where like you can see people talk about options that like don't know what like gamma is. And that's always interesting to see.
Yeah, I think it's funny that you mentioned that. It's just like I remember when when Elon made the purchase announcement, everyone was just like, "Oh my God, it lines up with the expiry," and I'm just like, like the expiry in general is just like, it, people make it out to be this massive thing that it's like kind of not, um, and I really don't know why people are very enamored by it. There's like other expiries that are more interesting in my opinion. Um, a lot of that stuff just gets handled way before. It's not like this. Like people think that there's like this time bomb always with trading and stuff, right? Like there's this major event coming up. Oh my God, like no one's positioned for it. It's like if everyone knows about it, they're already positioned for it, right? Like no one's going into this thing cold. Um, so I think that that's kind of the idea with the options market. And I think if it's been interesting because I haven't really noticed retail pickup on options all that much. Um, yeah, I can't tell if it's because of um, the futures and perp market, or if it's because just in the broader sense, like people aren't really able to kind of be in the options market because they don't understand it. So I think as that kind of expands, you'll see more and more people kind of get it, but we'll see where that lands within a year or so.
Yeah, yeah. It's funny you mention events that are known in the future being priced in or not being priced in. I mean, we saw it with the BTC halving. I mean, of course, it's like a question of like correlation, causation. BTC went up like quite aggressively into and after the halving. Not sure if that's actually related, but it might be. Let's talk about ETH. EIP 1559 is coming mid July, probably, and it might actually make F deflationary as an asset. Do you think that like the expectation of that happening is priced in?
Yeah, so it's so funny, and like now ETH is
Loaded
kind of
question,
the
I know.
right. It's like now ETH is kind of the flavor of the month. This is like Bitcoin
Yeah, yeah,
Reloaded
yeah, yeah,
from a
yeah.
year ago, right? Is
Exactly.
the halving
Yeah.
priced in? Um, I think I think with ETH, it's a little bit more than just 1559 getting passed, right? Because the BTC halving is just like that's programmed, right? Like that's not going to change. Whereas 1559 needs buy-in from both the miners and devs and the community at whole.
Hmm.
So there's still some talks, there's still some quote unquote insurrection between some miners who are not in favor of passing 1559. Obviously, they're getting circumvented a little bit because of the base fee going back to the community. Um, but I think the interesting thing with 1559 is that like I think right now you're seeing that get priced in, right? Like
Hmm.
uh, you know, ETH doesn't really have much of a narrative outside of you know, uh, like 1559 kind of coming out, L2 is rolling out, that kind of stuff, like which I guess actually is a pretty good narrative, but I think a lot of it is front running that trade, right? A lot of it's front
Hmm.
running the deflationary mechanism, but I think what people aren't pricing in is just like what happens if there's a fork.
Yeah,
Um,
yeah.
and I think even though it's like very, very unlikely that a fork is a long-term thing, it still could have a short-term shock on price. So, or just distress in the community. So I think that's another thing that people need to consider is just like this isn't going to go over smoothly, right? Like uh, it's kind of hard to imagine that you just kind of axe out miners from some part of the picture, right? Because like the base fee is still a sizable amount, right? Like
Mm.
that fee is still going to miners directly, right? So it's not going to be a very happy experience for them. So I think from that perspective, it's people need to price in the other side of the tail, which is what happens if there's a fork, and what happens, how long does the fork last, and what does it do to price until then, right? Like, uh, and so on and so forth. How does it get resolved? Whatever else, right? So I think that's going to be an interesting point of view uh, come June, July.
Yeah.
And I think right now people are just like pretty happy that ETH is going up and they don't really want to care about the downside, which is fair enough, right?
Yeah.
Like, you know,
It's been such a pain trade. I mean, I hated ETH for so long because I had so much and it was underperforming so much. And so, I mean, I feel like a lot of people are super happy about ETH finally doing decently.
yeah, I mean it's hard, right? You're watching Solana go up and you're holding your ETH bags crying every night.
Yeah,
Um,
yeah, yeah.
no,
I
but I
mean,
mean,
no reason to get personal here. I mean, that's
no, I mean
it's
it's funny. It's just like uh, you know, people definitely get attached to their bags so often. I mean, this happens to all of us, right? Um, and like ETH was one of the funniest trades because you know you had that death of ETH party by the Bitcoin maximalists, and then ETH
yeah, that was
rallies, and then like
hilarious. Yeah.
yeah, and then like you have the ETH salt on Solana and BSC. It's just so funny to see the but my you know the idea of quote unquote but my project is the right project, right?
Yeah,
Um,
yeah.
you know, from the
People
outside,
get
like
so religious. It makes no sense to me. I
yeah,
mean,
I,
like,
I think I think you know to some extent we should thank the people who are religious because if we were all just super you know pessimistic and just hopped on whatever worked, um, people wouldn't build cool shit.
yeah, yeah,
You know what I mean? Like you wouldn't really have this environment where like you need some people out there to just be like cult believers because they're the ones who like will build in a bear market, you know? Like if everyone goes on vacation during a bear, right? Because they've made too much money and now they just want to don't, you know, not want to do anything, then nothing's gonna ever get built, right? Like you need people to be hardcore believers. Um, and that's I think, you know, kind of the benefit that these cultists have.
oh, for sure, for sure. And I mean, it's also like, I mean, looking at bubbles historically, I think Suzu talked about this. Like, there's always like the underlying technology. If something is wildly overvalued, usually the like core technology is still extremely useful and interesting. I mean, looking at railroads, looking at internet. I mean, like in the 2000s, the huge internet bubble, like out of that came Amazon, Google, Facebook, and like I don't know, like they might not have happened without the big bubble before that like built out all the infrastructure. I mean, so much capital just flows into these hype areas, and crypto is the same, I would assume.
Yeah, 100%. I think like, you know, it's kind of the topic of conversation now, which is like the super cycle idea, right?
Exactly. Yeah.
Um, yeah. Without patting myself on the back on this one, you know, I had this like I had this thesis like a couple months ago. Um, you know, like once an asset class kind of just hits escape velocity, which I'm very confident, you know, Bitcoin and DeFi hit, um, it's really hard for them to kind of exist but still take like a massive, you know, haircut from here, right? Like
Hmm.
some people are kind of like, oh, we could totally see 70%, you know, lower from here. It's just like, yeah, but if we see 70% lower from here, it's just kind of over, you know?
Yeah.
Um,
Yeah.
you know, like okay, maybe it's not ever over, but it's like something really bad must have happened for us to fall 70% from here, in my opinion. Um, because it's just like how many people were bought in, right? How many acolytes did we you know have joined the group, right? Like it's really hard to imagine that all of these people were kind of like thinking about selling, right? Like people don't realize that like you know when there's a massive drawdown in the market, it's literal you know loss of confidence, right? Like the same people who bought the 20s and the 30s are now selling because they just
Mm.
think, oh, this is kind of over, right? And that doesn't really happen unless you have you know something that's like really really exogenous, something that's like really just you know a 4 or 5 sigma event. So I think that's going to be like the broader theme for the super cycle. It doesn't mean that price can't go down. It's just more like, is Bitcoin legitimate or not? Yes, it's legitimate now, and is like DeFi here to stay? And I think yes, right. Like those are
Mm.
the only two questions, in my opinion, that got answered in the last year. And you know that wasn't really answered before 2020, in my opinion. But now that there's like skin in the game from pretty large people, I think you can pretty comfortably say like, you know, that's going to be the state of the market in the future. Uh, it's funny. It's like, when you say that like the biggest benefit of 2020 so far has just been like, you know, like it turns out this whole thing isn't a scam. It's like it's such a funny outlook, right? Um,
Who would have
because
thought? Yeah.
right, well, it's just kind of like, in 2019, in 2018, I was just kind of like, like I don't know, like there's still some doubt. Right now, it's just more like, okay, there's no more doubt about this thing working out, right? Like there's no more doubt that like this is here to stay for longer than a hype cycle. And yeah, credit to Sue's point earlier too, with baseline technologies being super interesting. I think everybody, like it's so funny. I see it on my Twitter feed now all the time from like the tradfi groups. Like at first I see them kind of mocking DeFi. They're like, talking about like
Mm.
Alchemex or
Yeah,
whatever
I
else
saw
is like,
that. I saw that. It's
yeah,
some of the takes are so bad. Like you're like actually surprised.
right. It's so funny. I think like you see these people kind of like bash on like yield farming or liquidity providing or whatever else, and then like and they kind of like joke about it enough to the point that they actually use it, and then they become maxis. It's the funniest
Mm.
thing, right?
Mm.
It's like such a classic like tale of hubris and arrogance, right? Like you see these people who are like, oh my god, haha, look at this like funny world of goofy finance, right?
Mm.
Where there's like rug pulls and all these things, and then they go use it and they're just like, holy shit, this is amazing, right? um, Jim Bianco from Bianco Research, it wasn't
Yeah.
really this
Mhm.
person uh, who really called out DeFi or anything, but then like when he like really used it, it kind of was like a transformative experience for him, and I really noticed it from his tweets. I spoke to him briefly as well, um, but it's just like now he's kind of going around and just telling everyone like you're gonna lose your job if you don't go all in on this industry. And I think that's like the network effect. That's the super cycle to me, right? It's not really price dependent. It's more like, is this core technology going to stick around? And it's like, yes, right. Will it look different? Will regulations, change things? 100%, right? Like all of the best companies for the internet were arguably made after the dot-com bubble.
Yeah. Yeah. Yeah.
Right. So it's like, can the landscape shift? 100%. But is it like, but is it going to completely falter? I don't think so, right? Like me being able to send USDC from here to, anywhere in the world within a second, any day of the week is going to be a massive thing forever.
Yeah. Yeah.
Getting a
I mean
loan.
the biggest bull case for crypto is just interacting with like any big bank. It's ridiculous.
Yeah, yeah. And even, touching on the earlier topic of this call, right? Like with yields, like that's going to be such a massive part of this. It's like someone
Mm.
wants to unload, like put up 100 billion in TVL, like that's going to be possible eventually on Compound, Aave, and the rest, right? So I think you're going to continue to see more and more signs of adoptions like that lead to a super cycle, right? And you'll
Yeah.
probably
Yeah.
have a cap downside, right? Because a lot of the selling that occurred in 2018, 2019, like that selling doesn't really exist anymore. Those coins got transferred to stronger hands that aren't really, USD strapped anymore, right? Like
Mm.
they don't really
Mm.
need the cash to operate, right? Um, this is also why like a prolonged bear market uh, can have such a big impact on a prolonged, bull market, right? Like you just don't have the same group of sellers that you did a couple of months ago.
That's true. Well, I mean, I agree 100%. I mean, DeFi just like in general strikes me as like a super reflexive asset class, right? Because I mean, the fundamentals actually do improve with more people using it, and that's just like the biggest bull case for all of DeFi, in my opinion. That the more people use it and the more TVL you have, and the more liquidity, the more useful it is. So you like the like classic Soros reflexivity of fundamentals improving with usage and with price is so true for DeFi, in my opinion.
Yeah, I think it's actually like with DeFi, it's even funnier because it's like not only is the fundamental better, but it's also like the price will appreciate as more people use it, right? Like it's
Yeah, yeah.
reflexive also in terms of the value, right? Because now
You have like two
you know,
layers of reflexivity
right?
almost. Yeah.
Yeah, it's very hard to model too, which is the interesting thing. Um, it's very hard to model forward expectation in DeFi because you have all these variables. But it's also, this is how we understand it today, right? Like liquidity mining, like yield farming, um, you know, getting on-chain leverage, that kind of thing, doing over-collateralized loans. Like this exists today, but in the future sense, it might not. So that's something that we should also be cognizant of, I think, for anyone that's taking on like serious risk in this market. Is like, this is our understanding of DeFi today, but it can totally change, within a couple of months. And maybe it doesn't become as reflexive anymore. Maybe it becomes just, super easy. Maybe it becomes like basically like TradFi, but just exists on decentralized network.
Mm. Yeah, for sure. Good point. Absolutely. I have a question about the mental aspect of trading. I mean, we touched on it earlier a bit about like people becoming religious about the bags they own. How do you like? It's super stressful to trade for a living, obviously, because I mean, like you take risk for a living. How do you personally deal with that? I mean, what's your escape from markets?
Yeah, wait, like trading stressful? I never knew that. Okay. It's the worst. No, but it's also the best. I think uh, for me two things became kind of clear when I joined, like on the risk taking side. Number one, it's you know being being a trader, being an investor, it's kind of just an abstraction of the rest of the world. Like you're taking a risk doing anything really, right? Like if you're, betting on a company, if you're betting on like your boss or whatever else, right? Like you're taking a
Mm,
risk on something. Trading is interesting, especially trading crypto and especially trading it personally, or in a proprietary manner. Like it just gives you all of the control. Um, which some people might not like, right? Like some people that might be too overwhelming, but for me personally, it's like I can make the decision in order to take risk, to not take risk, right? I can make the decision to, kind of, be on this end of the risk spectrum, to be, or to play it safe or whatever else. And I think that's a really unique thing.
mm,
I talk to a lot of my friends who are in more of the traditional space in finance. And, they talk about like market forces, right? Like, the S&P going down, or, like the COVID crash or whatever. And even back then, it was funny because for them, they didn't really realize that it also had a negative impact on their job, right? Whereas for me, it's just like, holy shit, like Bitcoin just nuked like 50%.
yeah,
Yeah, I have to care, right? Because this is
of course.
this is
Yeah,
the
of
thing that we're
course.
right. Like, this is what
Yeah.
we're trading, right? But for them, it was kind of like, especially in the banking, consulting, private equity, that kind of side. Um, this is more of like it's more of like an afterthought, right? It's like, oh wait, this has like, some impact for me, right? Like, what if I don't have a job anymore because of this? So I think that was a really interesting thing for me to think about, in terms of taking risk all the time. And it's also just like a lot more interesting, being on this end. I think it's a lot more stressful, especially in a 24/7 market. Um, but also answering your the other part of your question, right? It's like how you're able to think about it all the time, and where where I spend my time outside of this. I try to do things that like really take up 100% of my mental space when I'm not trading. Um, so a few practices that I found that were really beneficial for me is like number one, writing my thoughts,
Mm,
especially on more of the macro front, right? Or trying to think about a bigger picture, or an investment or something. It's just like writing on pen and paper just is the best. So
mm-hmm.
I know a lot of people love using like Google Sheets or whatever, or sorry, Google Docs or whatever. But I think it's just so much better writing on pen and paper because it just sticks with you for a lot longer. Um, but writing really really helps me a lot. It just kind of puts my ideas that I have in my brain, but on a piece of paper. And sometimes I just write nonsense. Honestly, it's just like rambling thoughts, but it just
Mm,
gets everything out there, everything that I'm thinking about, and even the thoughts that I didn't know that I was having, they just kind of get out there. Um, and another thing is, I know an awful lot of traders in the space constantly check price. Um, unless I'm in a position to where I need to take a trade or I can take a trade, I will not check the price outside of like, something that's normal, right? Like I know some people who like, I go to dinner or something like that, right? They have their phones on the table, right? And it's, this is the best of us, right? Like this happens to all of us. I'm not knocking on anyone, right? But like it just kind of sets up a negative way to be a participant in a 24/7 market, because it's like you're not awake for 8 hours a day, let's just say, right? Like, how do you reconcile that, those hours, right?
Yeah,
Like
yeah.
versus the hours that you're awake. Um, so I think between all of these different things, you really do need to just find a lot of balance, especially in the time that you're not trading, and just focus on something else completely. For me, that's also been like, this is kind of known for a lot of my friends in the space. I enjoy like coffee, so that whole process is
I saw
a
your coffee machine. It looks like a plane cockpit.
it's a very interesting machine, actually. I'm still getting better at it, so hopefully you guys will see more content. But it's something that takes up the entire time, and it's a process that I can do fairly actively, and that I can obsess over. And it's kind of like trading in a way, because it's like it's analytical, and it requires a lot of process, and it's something that I drink every day, so it just makes a whole lot of sense.
You need an escape, right? Because I mean, like if markets and trading is all you do, I mean, some people can, but I mean, most people like you need something to escape to, because if you don't, like, eventually it's gonna catch up to you. I mean, that's what I've observed with myself and with other people. So that does make a lot of sense. We have one question that we ask every guest that comes in, and that is, what is the most interesting or surprising thing you've recently learned about markets or trading?
Yeah, man, I have like so many things that I want to talk about, but
If you want, we can also just like talk about something else and then come
no,
back
no,
to
no.
it. Like,
I meant
whatever.
just with things that I've learned in the last couple of days to weeks. I think that's a funny part of crypto, is just like you're constantly learning, and even these ideas that you
Yeah,
had
yeah,
like a couple of weeks ago just get broken, and you're like, holy shit! Well, I guess that no longer matters. Um, I think one of the things that's been really interesting to kind of see, and realize, is like a lot of the most, and I won't pick names because I don't want to piss off any community in specific, but in the last couple of weeks, we're seeing a lot of repricing in DeFi assets. And if you look at them closer, right, like the ones that trade at the best fundamental value are the ones that do the worst. And the ones that trade at like, at the highest price, highest valuation, whatever else, that do the best are the ones
yeah,
that have the shittiest fundamentals, right? The ones that accrue the least amount of value, right? And so on and so forth. So I think that's just, it's funny, because we have all of these people that constantly talk about, fundamentals being bearish, right? As a joke. But it's almost true, right? It's like reflexive in the price. Like there's a lot of
yeah,
tokens
yeah,
that like really don't accrue a whole lot of value. Maybe they have some future promise or whatever, but uh, they're the ones that trade at the highest value. And it's pretty consistent, right? Like they're not small projects. These are multi-billion-dollar projects, and they're constantly trading at like higher premiums than the projects that like have the best fundamental value, right? Like that accrue the most value, that have the largest ecosystem, whatever else. So that's been kind of something interesting that I've been noticing a lot more lately. Um, yeah, I think that should qualify.
yeah. That's super interesting. Do you think that's going to even out in the long term? I mean, for example, sushi is like one of the more fundamentally undervalued DeFi assets, right?
Yeah,
Uh, and it like it's been underperforming pretty badly.
yeah.
Do you think that's mostly like markets are efficient, but they take time to like get to that efficiency? Or do you think that like fundamentals don't matter and like fundamentally being underpriced is bearish?
It's just like, I mean, I think like fundamentals don't matter today, right? Like obviously, right? Like none of this stuff is trading at anything that it should trade
Yeah.
at. Um, but that's also like, in the long run, like this stuff will meet equilibrium if it keeps getting larger, right? Like uni will not be a like will not be over 100 billion unless it's like actually accruing value. I think one of the interesting things about like, let's just say sushi and uni, right? Um, is that a lot of the allocation is also like misaligned, I guess, in a way. Because sushi is very much like quote unquote the community's token, right? So you
Mm-hmm.
have all of these different players that own sushi, and so I think that's what you're seeing with a lot of the price action.
Mm.
Whereas unis is kind of like, okay, there's a few large funds that own a pretty sizable amount. The team owns a lot.
Yeah, yeah.
and so on and so forth, right? So I
So you
think
mean that
that's
more supply is in like fewer hands, meaning like
correct.
less float actually trades?
Yeah. Well, it's not just less float trading, but it's also just like less people like constantly dumping the price. Whereas like
Mm-hmm.
sushi, it's just like there's no one really kind of holding it together.
Mm-hmm.
So I think that's kind of what you're seeing with that trade in specific. And I think like generally speaking, like usually the ones that trade like that, it depends. It depends on like can they just ship? Like technically speaking, fundamentals will eventually like outpace just hype. But it's just like how long will it take, right? Like if Kashi Lending does well, if Miso does well, if all the, you know what I
Yeah,
mean? Like
yeah.
if they continue iterating on different, different chains, then like, that can definitely accrue value, but it's also like how long does that take versus like, okay, people just wanting to buy Uni V3 for the sake of buying Uni V3, right? Like that's a more interesting dichotomy, I think.
The pace at which you need to change your mind in crypto is so much higher than in TradFi, right? Because I mean, like narratives like come up and then dissipate in weeks and not in years. So like I mean, you talked about it. Like you need to be able to change your mind quickly, and need to be nimble mentally. Because if you aren't, you're just gonna get run over.
Yeah, I mean, it happens to the best of us, and I think that's like the most interesting part of this space is this like, even from the people like Sue and Kyle who are just crushing it, to like the Anon anime avatar crypto traders, like everyone is constantly uh, getting some of their base uh, you know assumptions changed every couple of months, and it's a
Mm.
good thing, right? Like it forces people to become students of the market, um, and like to constantly have their thoughts change. Like if you were a Bitcoin maxi and you didn't catch DeFi, it's like, oh, congrats, like have fun staying poor, right?
Yeah, yeah,
Like literally, right? And it's not just about even being like, okay, you didn't make money. It's just also like you missed one of the most, or at least the beginning part of one of the most interesting financial, like or actually technological advancements in like the last decade, right? Um, so it just pays to not have super rigid guidelines, um, and I think that's the whole point of the space, right? It's just like if you have some preconceived notion, it'll just snap, in a very not so long time. Like it's the same thing with like BSC, right, and like Pancake Swap, right?
yeah,
Everyone's just like,
yeah,
oh, this is a scam. This is a scam. It's like, okay, it's a scam until now there's more active users on BSC. I mean,
yeah,
who cares if it's just for SafeMoon? But it's just like the idea sticks, right? It's like ideology can really just get hurt really badly, um, because people you know just want to value something else, right? Like Kane put out a really great tweet thread today, just about BSC and Solana, and like how like, okay, this is no longer just a small thing. This is something that we should all think about. And I think it makes total sense, right? Like it's a great thing to kind of talk about. It's just like, constantly having your priors challenged.
yeah, yeah. I mean, it's a meme, but like it's so true. It's the classic Dan from CMS. He always says, "Do you want to be right or make money?"
Right,
And I mean, it sounds like a meme, but it's like one of the most fundamental truths almost of being in markets. Like
right.
you need to be able to change your mind quickly.
Yeah, I think, and a really good, and this is a habit that I've been starting to do a lot, especially with my friends. I think a really good practice is just like chart whatever bag you have, right? Like especially if you're like an ETH maxi in DeFi, chart whatever bag you have over like some Solana chain or some Solana DeFi or some BSC DeFi, and like that should tell you something, right? Like, okay, for sure, if you're a developer, if you're a long-term investor, maybe not, but it's like, especially if you're a trader, it's just like, you know, and this happens to all of us, right? Like, not everyone catches the trade right away, but like, if you're holding a lot of these bags, like through these points, it's just like, what is the market trying to tell you versus what you're holding? Um, and I think that's like an important way to frame investments and trades. It's like, what does the broader market think here, right? It's like, even if you're right, like, ideologically, it doesn't mean that you're going to be right in terms of the trade.
Yeah, yeah. I don't want to take up more of your time. I mean, I know it's late, wherever you are, so I don't want to keep you up longer than necessary. Anything else you would find interesting?
Yeah, I just wanted to give a shout out to a few of my friends, to Max Bronstein, to Avi Feldman, to the team at IC, to Flood. These guys have really helped me out a lot in the past year. To CL and Dan, of course. Yeah, these guys have all been a massive help to me. Just wanted to thank those guys.
Nice, nice. That's what I like about crypto. Like it's such an open market where like everyone kind of talks, and
Yeah.
like it like, and that's, I mean, from like what I've never worked in TradFi, so like I don't really have the comparison, but from what people who have worked in TradFi and in crypto have told me, it's like 180 degrees different. Like people share alpha, and people talk amongst themselves, and that doesn't really happen in traditional markets. And like that alone is like sales pitch enough for smart people to come into crypto, I think.
Yeah, I think even on top of that, it's like you have direct access to the quote unquote best, people in the industry. Like they're super welcoming. You know what I mean? Even if you're some random pleb online, like you can go and talk to like the best fund manager, and he's like pretty receptive, right? Like uh, that's a very big value to anyone who's young and like wants to do well in the space.
Yeah. And I mean that's also like such a positive aspect for the space as a whole. Because I mean, I forgot who I talked about it with, but like all the best people are moving into crypto, right? I mean, like the top Stanford, MIT grads, they don't want to do consulting, they don't want to do banking, like they want to go into crypto, and that is so bullish crypto long term, because
Yeah.
like the brain power that's moving into crypto, and like the intellectual capital that is moving towards crypto is long term extremely bullish in my opinion.
Right, right. I mean, it's uh, the majority of my friends who kind of went down the more traditional pathway, from these like prestigious universities, are now reconsidering everything because they see DeFi, and it makes sense to them, right? It's just like a logical click. I spoke to Anand from Paradigm about this, and he was just kind of talking about like the talent at Berkeley.
Mm.
Obviously, go Bears, but he was just talking about like every time he goes there, it's just like more and more kids want to join the space in some capacity, and more kids are just they're super sharp kids, and like they don't want to do like the boring work at Facebook or whatever. So I think like that's massive net positive for the industry.
Yeah, for sure, for sure. Thank you so much for joining us here. Was an absolute blast. Happy to have you on anytime again, and I hope you have a good night.
Thanks so much, Paul. Really appreciate being on.
Super good talking to you. Appreciate
You
it.
too, man.